Welcome to my 43rd presentation for the team of Finance and Accounts professionals. The topic is 92 causes that can adversely impact the financial reporting of other current assets of 10 types in the balance sheet. Overall, this is my 73rd presentation, considering all the YouTube presentations that I have made so far. What I plan to include in this presentation are: number one, reporting requirements of other current assets as per revised Schedule 6 to the Companies Act 1956 and Accounting Standard. Number two, summary of the number of causes that can lead to their incorrect financial reporting as operational and unethical. Three, listing of the causes that can adversely impact financial reporting vis-a-vis 10 type of current assets as listed below. One, unbilled revenue. Two, insurance claim. Third, receivables on sale of fixed assets. Fourth, reimbursable expenses. Continued short-term loans and advances. Sixth, security deposit given. Seventh, loan advances to employees. Eighth, prepaid expenses, insurance premium, AMC. Ninth, balance with the government authorities, and 10th, intercorporate deposit. These are the 10 other current assets which have been analyzed. Reporting requirements of other current assets. Uh, you can refer to Schedule 6 to the Companies Act 1956 in India, and as per point 6 subpoint S, the requirement is that a company shall disclose the following in the notes to the account: other current assets to specify in nature. This is an all-inclusive heading that incorporates current assets that do not fit into any other assets categories. And then point 8.8.1, which says, in case any amount classified under this category is doubtful, it is advisable that such doubtful amounts as well as any provisions made thereof against should be separately disclosed. These are the basic requirements. Now, overall summary of the causes. This is the table which has got 4 columns: serial number, head, type of the current assets, other current assets, operation related causes, and ethics related causes, column number 4. Now, in a row wise listing of other current assets is stated like unbilled revenue, insurance claims, receivables on sale of fixes, and so on and so forth. Now, let's look at the row number 1, unbilled revenue. There are 5 operational related causes identified and 4 ethics related causes identified. For insurance claim, 4 operational related causes identified and 4 ethics related causes identified. Receivable on sale of fixed assets, 4 operational causes identified and 4 ethics related causes identified, so on and so forth. So there are 46 overall causes identified for operation related and 46 ethics related causes identified. So I'll be taking this one by one. The listing of these operational causes that can cause adversely impact reporting in the of the reporting in the balance sheet. One, unbilled revenue. The causes are delays in completing milestones or deliverables respect to the revenue, ineffective tracking of the revenue accruals, systems errors in recognizing revenue, disputes with the customer regarding the billed amounts, and incorrect estimation of the work in progress. These are the operational causes. Ethical causes are intentionally delay in billing to manipulate the profits or reporting of this revenue. 2, overstocking work in progress. 3, concealing errors in billing systems. 4th, underreporting to reduce taxable income. In fact, it can be overreporting also. Operational causes that can impact the impact of reporting of the insurance claim. The second other current assets. Insufficient documentation for submitting of the claims. Delay in claim processing and approval by insurance companies. Rejection of the claims due to technical reasons or non-compliances, and understatement or overstatement of the claim receivable. This is something very important because in case there is the proper documentation not there in the company, now all these causes can be there. Ethical causes: false claims to inflate receivables, suppression of the valid claims or over-reporting expected claims in financial reports, collusion with the insurers for wrongful payouts, and misrepresentation of the claims eligibility criteria. Again, important point. Now, receivables on sale of assets, operational causes: lack of documentation for sale transactions, assets valuation errors, delay in payment from the buyers, and impairment of the assets before the sale, not incorporating that. Ethical causes affecting with respect to receivables and sale of assets are deliberate overstating assets value, misleading classification of the doubtful receivables as current, concealing terms of deferred payment agreements, and manipulating asset sales timing for better reporting, particularly during the financial year end or even quarterly closing. Operational causes that can reverse adversely impact reporting of reimbursable expenses. One, reimbursable claims not supported by the expense documents, a very common phenomena. Incorrect allocation of the reimbursable expenses, system error in tracking reimbursement requests, and delay in reimbursement approvals. Ethical causes for reimbursable expenses: submission of the fraudulent or inflated claims, misrepresentation of the unapproved expenses as reimbursable, falsifying the supporting documents, and colluding and approval of the false reimbursement claims with malice intent. Short term loans and advances, operational causes: mismanagement of loan terms and agreements, misallocation of the funds for unrelated purposes, errors in capturing the loan amounts in financial books, and delay in repayment of the from the related parties. Ethical causes: misrepresentation of the loan terms to hide defaults, overstating the recoverable amounts from insolvent parties, concealing the related parties' relationship to avoid scrutiny, manipulating repayments for profit smoothing, and collisions to divert funds for unauthorized purposes. Security deposits, operational causes: difficulty in recovering deposits after a contract termination, improper documentation of security deposits agreements, delays in refunding deposits, erosion of the deposit value due to inflation, misclassification of deposits in the accounts. Ethical causes: misrepresentation of deposits as recoverable, fabrication of the deposits agreements, non-closure of the doubtful or unrecoverable deposits, intentional delay in reporting deposits impairments, misallocation of deposits to unrelated transactions. Loans and advances to employees, delays in repayment or recoveries, advance used for unapproved purposes, incorrect payroll deductions for recoveries, employee turnover leads to non-recovery, and lack of formal agreements for advances. Again, a very common thing. Ethical causes: approval of the advances without valid reasons, concealing defaulted recoveries, falsifying recovery records in payroll system, misusing advances for personal gains, and collision with the employees to overstate advances. Prepaid expenses like insurance premiums, etc., annual maintenance contracts, etc., operational causes: premature termination of the insurance policies or annual maintenance contracts, misclassification of the prepaid expenses, errors in amortizing prepaid amounts over time, disputes over contract terms with service providers, and incorrect renewal processes lead to duplicated payments. Ethical causes: overstating the prepaid amounts to defer expenses, misrepresentation representing the contract terms for inflated reporting, fabrication of the prepaid expenses, suppressing premature contract cancellations, and collisions to extend prepaid terms beyond validity. Balance with the government authorities. Delays in processing the tax refunds or credits, miscommunication with the tax authorities, errors in filing returns or reports, dispute over the amounts claimed, and regulatory changes impacting the refunds. Ethical causes: overstating tax refunds for better financial reporting, suppression of the payable balances, misrepresentation of the tax disputes as recoverable amounts, fabrication of the tax credit entries, and collusion to manipulate the government records. Intercorporate deposits, operational causes: default by the borrowing company, misjudgment of creditworthiness, delays in interest payments, inaccurate recording of the deposit terms, adverse changes in the financial health of the borrower. Ethical causes: concealing defaults or overdue payments, misrepresenting terms of intercorporate agreements, collusion to delay recognition of the impaired deposits, overstating deposit amounts for favorable reporting, and non disclosure of the high risk deposits. Building on the profitability and ethics, my second book was released in November 23, and this blog focuses on the 92 types of causes that adversely impact financial reporting by other current sets of the 10 types. This is based on my good experience on the auditing, internal auditing. My forthcoming third book will dive deeper into the innovative balance sheet strategies and ethical practices that can unlock profitability. You can also refer to some of the articles of your interest in the my website, Facebook, and LinkedIn. Overall, so far, of all the YouTube presentations that I have made so far, there have been 16,100 hours of viewing time and over 1.1 million views. Thank you very much.